It's my pleasure to introduce Stephen Weiss.
Thank you, thank you. Appreciate you all being here.
Joining me now, former hedge fund manager Stephen Weiss. He's the author of The $1 Billion Mistake, Learning the Art of Investing Through the Missteps of Legendary Investors. He was managing director at Lehman Brothers as well.
Let's get the Fast Money trade with Stephen. He's, of course, a Fast Money contributor. And
joining us today, Stephen Weiss of Short Hills Capital. Stephen, it's always a pleasure to speak with you.
It's always a pleasure to be here.
Welcome on set.
Thank you.
You're suggesting the dollar, much beleaguered dollar, might go up, not down. Is that true?
It is true, and I think you and I are the only two people, not only in the country, maybe the world, that believe that. I've never seen a better contrarian trade than the dollar.
Lehman Brothers at the time was a mess. Now it's gone, so it's a real mess. But at that point, it was just dysfunctional. So I went in there. We were doing $500 million in revenue and losing money hand over fist. And by the time I left 5 years later, we were a $3 billion business and extremely profitable, most profitable area of the firm. The reason I left is that I was supposed to be in Flight 93 that went down in 2001, September 11th.
This must be a poignant memory for you anyway. At 9/11, you were scheduled to be on one of those ill-fated flights, right?
That's correct. I was supposed to be in Flight 93 and just decided not to go. There's a big meeting on the West Coast. I said, they don't want to talk to me there. It was the titans of tech, CEOs of all big tech companies. What do they want with me? Stayed in New York. Best decision I ever made. But the interesting thing was, it wasn't until 4 months later that I realized it, when the FBI showed up at my door and spoke to my wife and kids and said, how come Mr. Weiss wasn't on the flight? And that's when it hit home. So I never put two and two together. Such a bad memory from being down at Ground Zero that day that I chose to forget it. But so it is somewhat poignant.
After that, the kids kept saying, where are you going? You're traveling. So I went in to resign, and they wouldn't. Let's talk about the markets. The first thing is, and I'm sure you're sophisticated enough to know this, given that most of you invest your own money, forget you ever heard of the Dow Jones Industrial Average. It's mind-boggling to me that it's still referenced in the media at all. It's 30 stocks. Everybody that I know uses the benchmark of the S&P 500. That's 500 stocks. It's a much broader reference point for investing. And if you take a look at the 30 stocks that show up in there, it wasn't that long ago the Eastman Kodak was in there, and guess what? They don't exist anymore.
About these round numbers?
I could care less about it at all. All I care about is valuation and fundamentals. That's all I care about. We make too much of that. I've had the conversation, I can't tell you how many times when people say, I can't afford it, it's $600, it's $500, but it's really the dollars that you're putting up and the return in those dollars, not the thing is, Judge, you were beating me like a dog last year when I owned JP Morgan and it kept trading down, so I'm a little gun shy. I don't want to make the wrong move here and have you come back at me.
You hear about these highly touted analysts on the street, forget it. At the end of the day, you have to do your own work. And for managing money, it's very, very important to look at rotation, not only of asset classes, bonds, equities, but also sectors. Is it time to be in retail, or is it time not to be in retail? Retail is an early sector. Or is it time to be in cyclicals? Buy, hold, sell. Well, we know that's a myth, right? How many sells are on the street? Very, very few. Hold can be a code for sell. Buy can be a code for, I know they're going to issue equity, and I want to be there when they do. So I'm putting a buying on it, but I don't really believe it. I said, where's the value there? Well, the value there is if they hit. But if they don't hit, it's a zero. To me, that's not value. There's no intrinsic value there. So you have to make sure that they are what they say they are.
And let's just get a comment first from Steve Weiss, Herb, because Stephen Weiss bought Diamond this morning. Stephen, what were you thinking?
Well, hey, Judge, I actually bought it in the pre-market. And I bought some when it opened for trading. And here's what I'm thinking. Basically, I don't have a nut allergy, so that's the first thing, so I'm okay with that.
Maybe you're just nuts. How about that one?
Well, the second thing is sometimes you have to be a garbage man, and when people throw things out, I look to see if there's still some value there. Here's how ridiculous it is. You had an analyst today that lowered his price target this morning from 75 to 25 and suspended earnings guidance because he didn't know enough. So I guess doing your own work is apparently too high a hurdle. What I see here is I see $1 billion in revenue, and I see the nut business, which is not going away, at about $400
We had a nice run to start the year, up about 7%. Today it looked like it was going to be ugly. And then it reversed, all on Greece. So at first, Greece wasn't going to do anything. The meeting was canceled. for tomorrow, and now Greece is going to deliver something that's going to make it all okay. In my view, Greece ultimately defaults, inescapable.
Judge, I think you're absolutely dead on it. To me, it's about asset allocation. That money has nowhere to go for return but in equities. And it's been very, very long in coming. People looked for it last year. We're starting to see money, net inflows into equity funds. My guess is it picks up steam because people can't pick up their 401ks or their monthly stock bond statement and see, I'm not earning anything. I'm negative, as BK said.
That Stephen Weiss is making. You're not getting any money or return in any of the other asset classes, so you better be in equities because it's the only place that you're going to see it. And you're dumping all over a company's ability to raise its prices.
Herb, let me ask you this. Would you feel better if they weren't able to raise prices, if they had to take price cuts?
No.
Would you become a bull then?
People got excited about a beat that was not really a beat.
So you hate joy. You hate pleasure.
Don't we have another company to talk about here?
Oh, I can't wait to get to that one, too.